Bloomberg. Everybody loves Bloomberg.
Actually, wait, no.
Everybody got their movie review worksheets? Got the movies? If you want to borrow them, you can, but you got to give them back. Everybody get the quiz notes blue book? Okay, excellent. Everybody know about the book? You can get it online, you can get a 3-hole punch, you can get it as a book. You can get the Wiley Plus, it'll walk you through, the homeworks, and you have narrated slides, and you have walk you through step by step the homeworks. It's kind of cool if you need it. If you don't need it, you don't need it. Right. Let's see, what else I got? Oh, since you are all juniors, any sophomores, seniors, oh, go time. You guys are on the line, okay. Well, you juniors are on the line too, because you have to get some internships. For you juniors, double major, double concentration, data analytics. Anybody interested in data analytics? Okay. You want to talk to Mary Coe, right? Have you done the calculus? Data analytics, double concentrate. Okay, awesome. Anybody else? Yes, sir. I highly recommend it. Data analytics with anything guarantees you a job. Period. It's a little bit harder. You got to take the calculus, but you might be able to take it during the summer or online. But it's pretty amazing. You get into teams, high performance teams, and you basically go through the program together. Okay? And you talk to Mary Coe, and she will engineer it so that you can double, triple count your courses, so she can engineer it so that you can double concentrate. It's a little harder to do finance and econ or econ in another degree, because it's basically another degree. But any kind of combinations, especially data analytics, with any of those combinations. Did everybody get examples of the memos? Okay. And then don't forget to remind me, Professor Souza, show us how to write these memos, so I can spend 30, 40 minutes going through the format, the logic, and stuff. Okay. Yes, sir.
Question on the movie reviews.
Yeah.
So on your grading assignments, or does it matter what order we do them in? Because on
I do like you to see the inside job first.
Okay.
Because it's very methodical and it's a little more formal. And then the big shorts, it's together, you get a cake, you hang out.
Yeah.
You had a good time. But the big short's really fun, so it's margin call.
On this, it says, on the logo package too, it says do inside job second, but on this one it says do inside job first.
Oh, I would do inside job first, and then big short, and then margin call. That's what I would do. I really don't even care if you do margin call and big short. Whatever, but it seems like that's a good sequence to do it in. But definitely inside job should be next. Did everybody get their calculator notes I wrote out? Okay, making sure. At some point I'm going to stop writing some of this stuff. And then everybody got the blue book to take your quiz notes in, and you got your quiz. Everybody get a copy of the quiz? Okay, just want to make sure we're on board and not leaving anybody behind, because the train's leaving the station. Okay. Everybody got a syllabus? Okay, now be careful on the syllabus. Everybody gets confused because I say assign homework problems, and everybody goes, oh my God, Professor Souza, the homework really due. September 4th, last week, I want to take a look at it. It's like I want to take a look at the pre-test on the 11th. Hold on there. Pre-test due Wednesday, September 18th. So So I'll take a look at it, and then I'll take another look at it the week after that too, because usually I have about 75% of the class, will make an attempt at it, and then the other 25 will come up with some reason why they didn't do it. And then I'll look at the memo one. I'd like to look at that as soon as possible, once I go through it, and kind of give you some ideas on how to do it. And then homework one, it's kind of the same thing. I'll take a look at it on the 25th. Probably, usually about 75 to 80% of the class has it done correct. And then the others, again, it's, same thing. I didn't get to whatever, some excuse. But I like to check things, see where you are, progress, give you some, I like to see where you are, push you along, kind of get you to move through the material, because I don't know about you, I procrastinate too much. You wait till the last minute to do stuff. But you're not like that, right? You guys aren't procrastinators, you just fall over, you get stuff done early. Right? And then I gave you the problems, correct? For Wednesday. Problems, and you have the teams, you're in teams, and the teams know what PowerPoints they're doing, what chapters they're doing, correct? Anybody not in a team? Anybody a one-person team? Well, actually, a one-person team is not a team. Anybody got two-people teams? Anybody got a four-person team? Okay, excellent. Crank it along. As you can see, a lot of my job is just administration. Okay, and then I also have a extra credit called the extra credit problem set. And I already gave you the solutions to these, so it's, I'm not making you sit down for like 2 weeks grinding this stuff out. It's like, oh, here's the solutions. Oh, there's the problem. I get it. Okay, and there's the solution. Okay, I'm gonna write it down. Oh, that wasn't that hard as I thought. You know what I'm saying? It's hard when you don't know the solution. When you got the solution, you read the problem, it's like, wow, that was easier than I thought. And the reason why I do some of this stuff is because I found out when I said, okay, you guys gotta go read chapter something and go do the homework problems. And then you would come in and half the class would say, I didn't read it and I didn't read problems. And, I didn't really study for the exam, and give me the exam, and give me a C or a D or an F. And I know at the end of the class you'll feel sorry for me, and I'll feel bad and give you a C, in the class. It's a totally lame way to run a class, and a totally lame way to grade it. So this is production based, right? It's production. The more you do, the better you do, the better you grade. Can you get an A+ here? Some of my other places I teach, you can get A+. It's pretty awesome, don't you think? A+, wouldn't that be great to have on your transcript? A+. Yeah. Okay. Maybe you can petition the university, the school, that they can debate that for 5 years. You get A+. You go through pretty quickly once you get started on it. And then what I would do is I usually work in teams on these things. We crank it all out, and then we go back and we study from it. We talk about it. It's easier, right? When you get the solutions and the problems, you can read it, you can memorize how to do things. So you learn how to do things wrong, you can do it the rest of your life. Why not do it the first time? So hopefully this will help. Hopefully this will help. I feel a little bit more comfortable with the mathematics. Anybody have a problem with mathematics? Anybody comfortable with the math? Anybody uncomfortable with math? Math is great. I mean, it's just, I thought I was really bad at math. My high school and stuff like that, I didn't do very well at it. And then when I got into college, I had this great professor, Blaney College in Oakland. And I had a great math professor at Cabrillo in Santa Cruz, and I found out I was actually pretty good. especially when I did the Honda. I was really bad at it when I didn't do the Honda. So go figure. Anybody interested in working for a financial institution? Okay. Did I give you the SIE stuff? Okay, this is this is really amazing. I went to go work for, just raise your hand. I went to go work for Charles Schwab. Anybody heard of Charles Schwab? Yeah, Charles Schwab. And before that, I worked for a company called, what was it called? West Capital, or some broker dealer, where I got my Series 7 and 66, and all of these licenses and securities. And when Schwab bought our company, and then we all went to go work for Schwab. I came in, I went to go work for these guys. They didn't even know who I was. They really didn't care, but they didn't know who I was. When I walked in, I was one of the top real estate economists in the Bay Area. And I was also had an investment advisory firm that I was working for, selling real estate securities. And I had a following of organizations that would hire me to come and do economic updates during the year or at the beginning of the year, because everybody wants to know, what's going on, when's the recession, and that stuff. And so I went out and I did my little, dog and pony show. And they heard that I was doing it, and they said, "Whoa, pony boy, you need to slow down. You can't just go out, and make these presentations. We got to look at the presentations first. Plus, you need you have a Series 7, which is a registered representative license." So I said, okay. So I gave them the presentation. They edited it down because it was pretty controversial. And then they came back to me and they said, "Well, you can't do any public presentations anymore because you don't have a Series 7. And I said, "But I do have a Series 7. And they said, "Oh, I guess you can go out and do the presentations, but don't talk about any of this other stuff." So by having the license, you could do a lot of stuff. And if you're a marketing person, which I work for the marketing department at Schwab, we all are licensed. Okay, we were all licensed. So if you want to go work for B of A or Wells Fargo or Schwab or Franklin or Goldman Sachs or JP Morgan or some of the large, really well-run, well-branded financial institutions, you have to have a Series 7, even though you're a marketing person. Okay. If you want to go on and be an investor relations person, investor relations, which is basically an in-house marketing person for a large hedge fund or a consultant or something like that. Depending on the firm, you got to be licensed too. You got to be securities licensed. Just like if you were a CPA and you were doing, audit reports and, signing off on Sarbanes and stuff like that. You have to be a CPA. You can't just give an opinion, or qualified or non-qualified opinion without a California state, licensed, CPA. Can't do it. Okay. And if I was working for one of those brokerage firms, and I was actually publishing equity research or bond research, they have to adhere by the Chartered Financial Analyst designation under the Chartered Financial Analyst Institute. You got to be certified to be able to sign off, on these research reports. Okay. Oops, I'm running out of, maybe you guys can share this or something like that. What I gave out to you tonight is you probably should have received an email from Mary Beth Stat in regards to all the internships and the events that are coming up, okay, especially the involvement there coming up, which I highly recommend that you get involved. Obviously, I want you to be involved in the finance club and the investment group and the CFA challenge, but it's a great opportunity to get involved with these organizations. So that those are basically, as of today, the internship opportunities that are available to you upon handshake. And I highly recommend that you get going on the internships. Seniors, if you can swing it, do 10 hours a week, at a company either this or next semester. Juniors, you need to be looking for your internships now for next summer, because all the top internships, they're basically closing out here pretty soon, okay? Because they signed all of their offer letters, they recruited in the spring, they let everybody think about it, and most of the employment offers, particularly in the accounting side, was signed at the end of August. So the seniors are basically coasting through their last 2 semesters with signed employment offers, and they had already done 2 internships. So you want to try to line up your best internship for next summer now with Mary Beth. Take a look at these opportunities for you. If you need a letter of recommendation, you need a phone reference, you need a review for your resume, you need some coaching before you go in. Mary Beth can help you out on the resume, and I can do the coaching and stuff before you go into the interview, and I'll take another look at your resumes after she's done with you, and then I'll soup it up and add some value add metrics into your resume that'll stand out, and those will be as talking points for you in your interview. Okay, so I would go for it. And then what I'm going to do is I'm going to hand this out. I know this is kind of clunky, but it says name, email, phone, and if you want an internship or a job, or if you want to work with me on a project. I already got my Biz Ad 136 class to do it. If you guys want to put it here, I'll forward it on to Mary Beth so that she knows exactly, and me know exactly what you're looking for, and then as opportunities come our way, I can point in the direction or say, hey, you'd be really good at this, or you'd be really good at that. We'd like to present you and then everybody took a look at got a look at the final report that we're going to do at the end of the semester. Did I go over this with you? Okay, so you have an idea. Does anybody need to take another look at this, or take some pictures or anything? Would you like to take a look at it?
I mean, didn't you just look at it? I don't know, was it?
Did I explain it?
No.
No, I did. Okay, I can spend about 10 minutes on it. Let me pass it back around. I have like 6 classes and stuff, so I kind of forget exactly where I made that happen. So you'll have to remind me if I'm going over stuff again. So once you pass them out, take some pictures, bring up the pictures, and then I'll go through these really quickly so you can see what we're shooting for, right, at the end of the semester. So all of the stuff that you're learning just isn't esoteric, theoretical stuff. It's like, oh, that's what we want to get to at the end of the semester. Okay? And then don't forget to give me your finance club intake forms. Will help, and I'll get you on our email list. And then we're going to have recruiters come. People are going to come on Wednesdays between 1 and 2. We're going to have our meetings then. But my goal is to bring in like AAA, AXA, BlackRock, Merrill Lynch, Morgan Stanley, and say, come, to the finance club meeting from 1 to 2 on Wednesday. Our students will be dressed with their resumes, ready to give them to you, and you can start collecting the resumes and then go through them, set up the phone interviews or whatever, however you do it, and hire my students. Now, don't come and tell me about your sob story, or how much money how rich you are, but come and hire my students. That's all I care about, is hiring. Okay, does everybody have one of these? Okay, you may want to take some little notes on this too, okay, because this is very specific. Okay. This is called the deck, okay, or pitch deck, okay. We use these in venture capital and private equity. If I'm going to go pitch a VC down in Silicon Valley, I'm probably going to bring a PowerPoint presentation, but I'm usually going to provide them with a deck. Okay, and even before I talk to them, they're going to say, send me the deck. Okay, so this is really important. If we're pitching, we work for KPMG, and we're pitching a Chevron to get their audit work, we're probably going to do a PowerPoint presentation, and we're going to produce this deck for the decision makers who are going to be making decisions. If I'm in marketing, I'm going to do this as a new product concept, or maybe an advertising campaign, or if I'm in IT, this is the systems design that we are basically recommending at the end that you implement, for either productivity gains or for product enhancements. So this communication device is extremely important, that you learn how to do these things. I had a friend of mine, he was making $160,000 a year, working at Lazard, just doing mergers and acquisition pitch books, multi-billion-dollar mergers and acquisitions in the technology industry. He was a C student in finance, but he had a $160,000 job putting these decks together for investment banks, which I thought was pretty amazing. So it's a clear cover, so I can see exactly what it is. I know what the company is, I know what the recommendation is, for the stock. Here's the intrinsic valuation that we're going to use the finance theories to come up with compared to the current stock price. The intrinsic value is below the current stock price, therefore we recommend selling it. We believe that the stock is going to drop by 9.2% over the next year, and then here's the team. Okay, it doesn't say St. Mary's on it, doesn't have my name, doesn't have a class on it. Okay, because we want it to look like a professional deck that was done by a company. Okay? Then you have basically the presentation overview. Okay, what's it going to be about? Then you have a little background on the company. You got the leaders. There's 6 of them. We want to know their name, the title, what their title is, how long they've been with the bank, and where they did their MBA or JD, okay, or both. Right? In JP Morgan, Goldman Sachs, those companies usually hire from the Ivy, or Wells Fargo, and some local, like Bank of the West and AAA, they hire from local universities. Then you might, I don't know, culture and value, some business segments. So these are the major business segments that generate the majority of the revenue within the company. Okay? So that's going to tell us their comparative advantage, where they generate the majority of the revenue. This should be all relatively familiar. This is actually your capstone course, brought forward in your junior year. So a lot of this stuff you would do in your last semester in one of your last classes. But I think it's good to kind of go through this stuff up front, because all of the stuff that we talk about in here determines the value of the stock of the company. Then we have the SWOT analysis, strengths, weaknesses, opportunities, and threats. We have the financial standing by assets, so here's the peer group. And we know that JP Morgan is the largest company within the peer group at $2.5 trillion in assets. Is that big? 2.5 trillion? I don't even know how many zeros that is. This is a lot of zeros. And then we have the financial ratio analysis. You have the subject firm, the direct competitor, peer group ratios, the industry ratios, and then we give, excellent, good, above average, average, below average, or poor, as the condition. And then we do an assessment. Look at these and go, oh, overall, its financial condition and position is good. This is the first step in the fundamental analysis in trying to evaluate the value of the company. Okay? And then we do another second set of a financial ratio analysis. So we have a larger sample. Then we have the technical analysis. We're looking for trends there. Is the company stock in an upward trend? That's kind of what we're looking for. And then what we do is we forecast out if that trend continues, what the target price would be in a year from now, and we calculate the premium on that, unless the stock is in a downward trend. And then we have what is called the perpetuity model, the valuation using the perpetuity approach, which I will go over with you. And by the end of the semester, it'll hopefully be burned in your brain. And by the mid-semester, if I ask you what the perpetuity model and Gordon growth, and multiple approach, and discounted cash flow, and you don't know, I'll probably start screaming. Because it's like, a month and a half into the semester and you still don't know this stuff. And then Gordon growth, or PE multiple. We got discounted cash flow. These are the 4 methodologies. And then we basically do 3 scenarios to come up with the intrinsic value. It's just a weighted average of the 4 models. Then this back page is a recap of the recommendation, and then we also recommend basically 12 derivative trades, and I'll go through what derivatives are. So that based on your research, we have a sell recommendation, And not only should you sell the stock, but we recommend that you buy puts and write calls and do these other derivatives, so you have 12 other ways of making money off of the research that you've conducted. You have your references, and then what I'm asking for now is a signing page. Okay, where you have your name, your title, and the date you sign it. Okay, because that's what we do. Yeah. Yes, sir.
Is ROE return on equity?
Yeah, that's correct. And then we'll learn about the capital asset pricing model, which is the model we use to determine the cost of the equity, but also the expected return on the equity, depending on if you're an investor or if you're the firm. Okay, we'll go through all that stuff. And again, I do hear from my students that I talk over their head, I use this language, I don't explain myself. Well, a lot of times you guys don't slow me down or stop me or ask me questions, so I just keep going. And then I was also told that, this was from one of my top students, straight A, accounting, KPMG. She said, when I started reading the book, when I came to class, and you were talking, I started understanding more about what you were saying. So, it's just something to think about. And then the last thing that I'm gonna do, and I'm gonna go off camera here, just leave it like that for a second. So how many people have business cards? How many people have business cards? Business cards. Okay. If you were going to Wharton, MIT, Columbia, NYU, Stanford, Berkeley, Davis, any of those schools, you basically get a business card. You get a business card. Why would you get a business card? Why would you get a business card?
Networking.
Exactly. Okay. How do you get jobs?
Networking.
Exactly. And your friends. So I would get a business card. They don't like me. So I went to Albert. Albert, I said, okay. He came back with this. Look at that. Freaking awesome. So you're at business one year, you're talking to people, maybe not around here, don't show any faculty or anybody here. Especially the print shop, don't get it printed here. But again, this is a phenomenal card. To meet somebody or trade cards, the look at them, be totally impressed. I mean, I would do these. And maybe if you email or text Albert, he may send you the template. Alright, so you just email it to the print place in Lafayette, just make yourself $250. That's what I would do. Okay. And those cards look a lot like my cards. Because I like the red. Because if your card's sitting in a stack and it's red, people are going to see it and they're going to pick it up and they're going to look at it. And when you're asking for somebody for their cards, you want to give them your card. Okay, so there's a swap. And if you give them something and you swap, you almost got them locked in to either talk to you or meet with you. Okay, so it's all psychology. It's all strategy. Okay? So those are my tips. So here's the course website. We didn't go through this, did we?
No.
And then I'll do the memo, and then we'll start doing go through the pretest. Okay. Did I go through the pretest?
No.
So you want to go to your financial management. You guys all have computers in front of you. Do you all have your computers up? Do you have the page up so you can follow along? Yeah, that's why I got the computers. So that you can follow along, you can do the research, you can work on projects and stuff. So this is how the course is laid out. So did you all receive the videos?
Yep.
Yep. How many professors give you videos? So I'm getting really good at it. So try to send them to you at the end of the week. Okay, so I'm feeding you content so you can go back and you can review. Okay, if you're absent or got sick, food poisoning, you can always go back and look at it. But I would come to class. Okay, and then you use the videos for reinforcement so you can go back and listen to stuff. Okay, and then this is the Wiley Plus. Okay, but you gotta pay for it to get access to it. I'll see if I can get access to it. And then the Who Knew It? Anybody know about this? Have anybody heard of Linda? Who Knew It? YouTube, Khan Academy, what is it, Coder Camp or something like that. You can go up here and go in here and get trained, I believe maybe R and Python. You can do it on YouTube. Code Academy is another good one where you can go and get trained in R and Python and Excel and that stuff. So you should do that. Okay, and then here's the course log. This is how it's going to look. So each week, like last week, yes.
Is the training free and does it give you
Who
a
knew it
certificate?
is? Yes.
And it gives you a certificate as well?
I believe so, but last time I looked, they didn't have an R on Python, but they may have introduced it by now.
Okay.
And Code Academy does do that stuff. And then Linda, which is another platform, yes, you can do certifications there too. Okay, so what's great about it is your generation, can learn a lot of these things a lot quicker through video training, where we, couldn't do that a long time ago, which is just awesome. And now you can do it on your phone, right? You can carry around and do stuff everywhere, which is great. And then, here's lecture 1, lecture 2, different sections, my tie, pretty nice tie. So hopefully that'll help you. Yes, sir.
I don't know if anybody else has this problem, but when I click on that video, it just says there's nothing there.
Oh, let me double check it then.
Yeah.
I'll talk to the IT people and see if they.
I just found it on your YouTube account, in case.
Huh?
I found these videos on your YouTube.
Yeah, you can join my channel. And I have a history of like 2 years of videos, real estate and all kinds of stuff. Because I record all my classes, and I make most of them, almost all of them public. Here's your calculator. Here are the lectures and notes on the financial product innovation, supply demand analysis, which we will go over because it's going to be part of the quiz, but here are some notes. Took pictures of them, then posted them up there. Okay. Here's your securities training, which the SIE, which I just gave you. Here are some historical course logs if you want to torture yourself and relive how much fun we had over the last few semesters. You can go back and look at that. Actually, the exam review videos, I'll be doing those too before the exams, like a Saturday or a Friday. I'll hang around and I'll do like a couple-hour quiz review or a midterm review session. And you guys can come and I'll record it and post it, so you can, again, watch it and train from it. And then the syllabus. Here's your statistical pre-test. Got it. And then here's the pre-test quiz and instructor notes. Here's the supplemental materials that I was talking about for your pre-test. Calculator manuals. So these are the full manuals for the calculators. So if you have the Texas Instrument, I got the whole manual there. Okay. Same thing for the 2 HP calculators. And then if you're into doing stock trading and derivative trading games, there's a whole bunch of them here if you want to do that. It's a little bit too much for an intro course, but we do that in my investments class. And then here's the quiz, which I already gave you. Oh, actually, I gotta update these. There's the extra credit. And there's the midterm, solutions. I think I might even have a final up there. Student evaluation, elevator pitch, business finance club worksheet. I already gave that to you. Resume templates. Did I give out those resumes to you last time?
Yeah.
Yeah, there's some really good templates out there too. And Barry Beth will help you. Course description, design, goals, objectives, meetings. There's the syllabus again. Supplemental materials, grading policy, and here's all the PowerPoint presentations. Some are edited, some are full. Writing resources. So there's a bunch of links in there. Do we have a writing center here?
Yeah.
Yes.
Yeah, I would, everything that you write should go through the writing center, so you can start working on your communications and your handwriting skills and get those things in place over the next year and a half. Just really focus on your communications and focus on your handwriting, okay? Because I just sat in the meeting the other day, I was writing all the notes, and they said, oh, Mike, would you type up the notes? It's like, great, so we all ripped apart the notes and gave them to Mike, and Mike needs to be able to read your notes, okay? So your handwriting is really important. My handwriting wasn't very good in my undergrad, but I really focused on it. And made it as good as I could, okay? And then here are some economic and finance movies and videos, interviews with, Janet Yellen, Ben Bernanke, some very influential people, economists. The video review worksheet, presidential elections, Trump policy analysis, economic forecast, PowerPoint presentation. Oh, this was really fun. Right after the election, I did a whole political economic analysis of the Trump policies on the economy, and, populating voters, and all kinds of stuff. And my students freaked out. I mean, they just couldn't handle it. Some of them were in tears when they realized what was going to happen. And a lot of it came true. So here's the memos, the URLs, the videos, memo videos, student memo samples, some example articles, the yield curve and dynamic yield curve lecture, which is on the exam, the technical securities analysis on the exam, although I'll be recording all that stuff, and then the accounting and the valuation stuff that we'll do at the end of the semester. Okay, so the website's a pretty good resource to go to. I'll be updating it throughout the semester, putting current information and stuff like that. Any questions on that? Okay, do your professors put that much work into their course websites? What are you paying for? No, I just like to have lots of resources so that, if you get stuck, you can use the resource and talk to me or whatever. Just make it easy to learn the material. I don't want you struggling to learn the material. Okay? All right, so let's do the memo. Okay, the memo formats, because you're going to be doing 5 memos. First memo you're going to do is a stock market memo. Where you're going to be forecasting the direction of the stock market. So you're going to want to start, reading articles. I would go to Yahoo Finance, stock charts, bigcharts.com, Financial Times, The Economist, Bloomberg. They blast the news. News comes out constantly, all over the world. Things are constantly happening, and it has an impact on the stock market. You're probably going to have at least probably 70% of your wealth in the stock market. Okay, so you probably want to know what's going on and what the impact's going to be, both short term and long term. Because if we're going into a recession, what do you think is going to happen with the stock market? Probably going to go down. And if you're retiring next year, do you care? If you go into a 3-year recession, and the stock market loses 20% of your wealth, and you may have to work another 3 years, like people did in 2008, 9, and 10, 11, 12, 13 to make up for the lost time and the loss that they incurred during the last financial crisis. You're going to be, hopefully you'll go to work for companies that will have 401k matching, okay, which are retirement accounts, which allow you to fund these accounts and invest them in stock bond portfolios. And the company will match you dollar for dollar, which is awesome. Sometimes they won't, but it's a great place to stuff money because you don't pay any taxes on it until you pull the money out when you're 59 and a half. Okay, so it's a great place to stuff money. And then if you take my investments class, I'll show you how to trade those accounts when you roll them over from a 401k to a self-directed IRA, and you can buy and sell and trade your stocks in your self-directed IRA and not pay any capital gains tax, okay, which is awesome. Right? So it's a way where you can really accelerate the accumulation of wealth. And do you want to accumulate wealth? Yeah, because you're going to need at least $2 to $4 million to be able to live comfortably and allow yourself to be able to spend down and live off the interest of your wealth, so that you can have a retirement and not run out of money and not hopefully get kicked out on the street because you don't have enough money for congregate care or old folks home, unless your kids are good. If you run out of money, your kids are gonna have to take care of you. So you're gonna spend all their money and Johnny's money. Now Johnny can't go to college anymore because you didn't plan ahead. Okay? So be smart. So what we're gonna do, is this is the memo. I'm taking notes or pull out the memo. I already gave you. Did I already give you the memos?
Yeah.
Yes.
So these memos are extremely specific. When you go work for a company, they basically can tell you the format in which the reports are to be delivered. Or they're gonna say, oh, no, just whatever you want to do. Just give me the report and give it in any format that you want. If the format's messed up, don't worry about it. I'll fix it for you, because I got plenty of time to do it. Now, they're gonna have standardized reports. And the biggest frustration with this exercise is a lot of students aren't versed in Microsoft Word. You do a lot of stuff in Google Docs, which doesn't have a lot of the flexibility that Word has. So I recommend doing it in Word. But it's a standard technical memo. It's a technical trading brief that would be submitted to a managing director at 4 o'clock in the morning, probably on Monday, Wednesday, and Friday of every week, basically giving you an update, giving me an update on what type of opportunities you're seeing in the market, not only the stock market, but the oil market, the gold market, the bond market, and foreign currency. And you would submit that to me, and I would look at them. And if they're all in the same format, I can scan them in 20 seconds. And then basically what I'll do is I'll go, I'll fund that, reject that, fund that. That one needs more work, okay? And then that way I can, very quickly, I know who is on track, who I'm gonna give $25 million to basically execute on those trades over the next two weeks with the 2 analysts, okay? So it's extremely specific. So first is memo. So it's gotta be in capitalization, it's gotta be bold, and I think it's gotta be at least 18 points. Everybody understand the point? 18 point font size? Everybody know what a font is? Everybody know what a font is?
Yes.
Yes.
Font size, okay, I'm just checking. This needs to be bolded and in caps. Okay. And then just to start off, the margins around the memo are 1 inch each. Okay. So 1 inch on each side and 1 inch on the bottom. Okay. Then you're going to have the date, with a semicolon, and you're going to indent, and then you're going to put the date in. May, September 2019, it's going to be 2, indent, to me, and it's going to be from, semicolon, indent, so it all has to be flush. Okay, U, and then there's going to be an RE, which is basically the subject. Okay, then you're going to have a line right here, not too much space, and then you're going to have a line that goes across. And when I do this right here, that means you need a little bit more space, or you need to narrow the space. You don't want the space to be too big, and you don't want it to be too small. You don't want the sentence right on the line, okay? So here we're gonna say stock prices forecast to fall. Stuff. Some place more display. Forecast to fall 5% over the next, and I like to use a number 3, even though it's wrong, instead of spelling it out, because we're always looking for numbers. 3 months. And I use this memo format all the time. I've been writing memos for to a company that we got a contract on to build some portfolios for. And the first thing I did was use the memo format.
Are there certain rules with capitalizing?
I used upper lowercase.
Just upper lower?
Yeah, I don't use I don't capitalize to or the, you know, but I just do upper lowercase. And then the text here is going to be, if you have your memos, if you have examples of the memos, you'll see that the language is very specific. So once you get the template set up, that's all you gotta do is you swap out stocks for oil, for gold, for bonds, you know, but the language is very specific, okay? Okay, first. I need a thesis statement, right? Isn't this a thesis statement? We know what we're tracking, we know that we're doing a forecast, we're forecasting it to fall a certain amount over a certain period of time. Okay, so everything you need to know is like right there. Now the reader's going to tell me more. We are tracking prices based on our, why do I use we? And why do I use I? Yeah, and you work in a team. Okay. So yeah, you usually don't take credit for stuff. You usually let everybody take the credit. Although a lot of people like to take the credit, even when they didn't do any work. But that's a different story for another time. So based on our research, we asked stock prices fall 5% over the next 3 months based on the following factors. And you want to use the language exactly like this. Okay? Semicolon. You'll learn as you read about the stock market, what makes it, prices go up and down, you'll learn about the factors, but I'll go ahead and do it right now. Based on the following factors. Rising earnings expectations. 2, low and falling interest rates, and 3, anybody think of another one? Think about another one? Oh, how about and rising global gross domestic product, or GDP, period. Does that sound logical? And it's therefore we recommend the following 36 trades. This should be bolded right here. This piece right here. 36 trades should be bolded. Okay, so we are going to trade, based on our forecast that prices are going to go down, there are 3, yes?
I don't know if you said it in the beginning, but is the we forecast stock prices supposed to be in bold as well?
No. The only thing that I like bolded is the, are the numbers.
So the sentence on the one you gave us, so it does need to be in bold then?
No, just, you could bold the 5% in the 36 trades.
Okay.
Because I really want to know the magnitude of the change, up or down. And then stocks, you can measure the overall stock market based on stock market indexes. Okay? And stock market indexes are basically stocks. Stocks are basically ownership in a company. They're the shares They're the equity ownership in the company, and these shares are traded on an exchange in the marketplace, and the share prices go up and down based on what people think the future profitability is going to be for the company. So if they think, revenues, sales and revenues and earnings, and earnings per share are going to go up in the future, then people are going to buy the stock. If they think that, sales and revenues and earnings are going to go down in the future, they're going to sell the stock. Okay? So what we're doing is we're trading 3 indexes, okay, 3 stock market indexes. Okay. And this is like a table. You'll see in the memo it's a table. And actually this needs to be centered. Okay. So maybe I'll do it so it's proportional. So it's going to be index 3 exchange traded funds. We have 3 of them. And also we have 5 stocks that we're also trading. Exchange traded funds were invented by BlackRock. Anybody ever heard of BlackRock? Down on Howard Street, they got like, $3 trillion in assets under management. A couple of our students went to go work there and have done internships there. It's basically one of the most innovative finance companies around, obviously in San Francisco. But these exchange-traded funds were really innovative. They came out about 12 or 13 years ago, yes.
What company was this?
It's called BlackRock. BlackRock. You want to write that down because you want to go work for them, particularly in their marketing department. Or in their data analytics, or in their finance, or in their accounting, or in their anywhere. Go work for that company. There's a lot of people that are floating around here out in Lafayette that want to go work for BlackRock, and they're all retired at like 40-something years old. Yeah, it's pretty amazing. They work their butt off, but they're done. So we're going to trade 3 stock indexes, okay? And I'll go through the trades in a second, what they are, and then I'm going to go back maybe next week, or on Wednesday or next Monday, I'll explain what these trades are, okay? And how these things actually work. And the 3 stock indexes, and again, this is in your book. The tickers. One is the Dow Jones Industrial Average. It's 30 stocks, which is a very small sample, but it's been around for like 167, 168 years. And it's called the Dow, or the Dow Jones. The other is the S&P, or the Standard & Poor's 500. Standard & Poor's is a big rating agency and an index company out of New York, down on Wall Street, literally on Wall Street in downtown New York. And this is the benchmark. This index of stocks is the benchmark index. It's the top 500 companies, the highest quality companies that are listed on the New York Stock Exchange. And again, if you don't know a lot of this terminology, write some notes down, and I'm sure you could do some research pretty quickly and find a lot of this stuff out. So the S&P 500, and then the other one is the National Association of Security Dealers quote system, which is called the NASDAQ. Okay, it's all online system. It's been around since like the 70s, and mostly tech companies are listed on the NASDAQ. So those are the 3. There's lots of other indexes, but those are the 3 main indexes, and these are the ones we're going to trade.
What is the second one?
That's the S&P 500. So it's that little and thing. The S&P, or Standard & Poor's 500. Okay? And that's the one we benchmark our performance on. So since we think that the stock prices are going to go down, we are going to, and you have to memorize these. There's 2 sets of trades, and that's it. Okay? You don't change them, you don't mix and match. It's if things are falling, these are the ones you use. If prices are going up, these are the ones you use. So it's binary. Okay? It's a binary solution. So you're going to write forwards. And just memorize this now. Okay? And then I'll explain exactly what these are. Or you can Google them and look them up later out in Investopedia. learn a little bit about them. You're gonna write futures. Futures, futures, futures. Futures. Got it. Okay. You're gonna write calls. Futures. And you're gonna buy puts on the futures. You want to write this down because you're not going to memorize it. You need to memorize it. I know, night classes are brutal. So those are the 4 trades, okay, for the indexes, okay? And we're going to make money based on your forecast, okay? And then we're going to trade 3 exchange-traded funds. And these are securities. They're portfolios, but they're traded as individual securities on an exchange. Okay, that's what makes them revolutionary. We are going to sell short. This is trading terminology. The book doesn't do a very good job of laying out trading terminology and doesn't do a lot of things very well, but it's a really good book. It's the best book. So you're going to sell short. You're going to write calls. And you're going to buy puts. Okay. How many trades do we have here? 3 times 4. 12. There. If you look on the memo, there's the index trades are given. And then 3 times 3 is 9. And then what you're going to do also here is these exchange traded funds. What I would do is do some research and look up Dow exchange traded funds. And a list of them are going to come up from Fidelity and Vanguard and all these companies. And go get a ticker. Okay? The ticker symbol is basically a code that's associated with each stock and each exchange traded fund. Okay? And then put the ticker right here. I don't know, Dow X or something, I don't know what it's called. And then go look up a Standard & Poor's exchange traded fund. Okay, and then I think that one's SPY. That's that one. And get the ticker and put it there, and go find a NASDAQ exchange traded fund and put the ticker here. NASDAQ, I'm just making it up, NASDAQ X. So put the tickers there. So you're going to have to do some research. And the people who read these things will know. They'll know. All right, so I got 9 trades there. And then what I would do is I would just do this one. I would go look up the top 5 companies in the Standard & Poor's 500 index, or in the exchange traded fund. Find the top, what do you think is the top company in the S&P 500? What company is, yeah, it's like Apple, Amazon, Google, those guys. So you can put, what is it, APPL? Apple, Amazon, Google, and then go find a couple more. And then the trades for the stocks are exactly the same as the exchange traded funds. Short. Calls, puts. What's 5 times 3? 15. And then what's 15 plus 9 plus 12? 36. Got it. Okay. So when I'm reading these things, I'm checking the numbers to make sure that they all add up correctly. So I can go through, 5 times 20. So I can go through 100, 200 of these memos. They're all formatted the same way, the numbers are the same way, the language is pretty much the same. The only thing that changes really is maybe the assumptions the degree of movement, and then I check the trades. Maybe some of the factors change a little bit, but the thing that's definitely gonna change is your data, the bullet points, okay, underneath this.
What does it say after the Amazon stock second?
That's like Google or Google. I just brought in Google. I don't know what Google's ticker symbol is. So you'll have to just look that up. You can put any 5 stocks in there that you want. Maybe you're interested in certain stocks that you want to start tracking and looking at. You can put their tickers in there. I don't care. Now, what we're going to do is underneath that, and how many pages is this memo? Got it. Excellent. Usually people go over to the second page when they're using, putting too much in the bullets. Okay. So underneath the table here, and there's going to be a total of 36 trades here. You're going to have the trades and you're going to have the tickers. Okay. And both the tickers and the trades need to be bolded. These need to be bolded up here, and they need to be centered. Okay. And make sure that these here, write calls on futures. You might need to move the bullets over so that it doesn't word wrap. Here it doesn't word wrap. And these columns need to be equal width. Okay. So you'll notice all of this when you're looking at the memos that I've given you. It's very specific. I mean, the memos are, I think the memos are beautiful because they're just so clean, and when they look perfect, they look great. And then at the end of the semester, you print them out in color and staple them together. So underneath this is going to be your first bullet. And then you have a second bullet. Usually these bullets are only maybe 2 sentences, right? They're not 5 sentences or anything like that. They're 2 sentences. And a lot of my students don't put periods after a lot of this stuff for some reason. It's kind of interesting. I guess, I don't know. I always put periods at the end of my sentences. And then you're going to have a chart here. And what I would do is create a text box and put the charts in the text box. So you can rearrange and give you some flexibility, as opposed to trying to put the graphs in with the text, and you'll get all kinds of weird word wrapping going. So I would create a couple text boxes, one for the bullets and one for the graphs, and that'll allow you to do some desktop publishing and give you some flexibility that you'll need. Because this is one of the most frustrating things, is actually formatting a memo. If you've never done it before, it is really hard, but you're going to be doing it. Okay? They're going to say, oh, go build this report or something, and you're going to have to start from scratch or something. So, and then these bullets are your data. Okay? This is your evidence. It's going to support your forecast. Okay? So maybe it says, since January, comma, the S&P 500 rose from, I don't know, something to something, whatever the index level is. Since January to today, the index went from this to this, up some percent. So now you're doing analysis. Right? So what is the time period? What is it that you're talking about? Did it go up or down? From what to what, comma, up or down by some percentage? Do you guys know how to calculate percentage changes? Do you want me to go through that for you at some point when we calculate percentage change? Do you know a percentage change? Yeah, okay, I'll probably do it again because I'm not convinced that a lot of people know how to do it. So this is analysis. So when you read the articles, they're going to be talking, there's going to be data in there. So I recommend you copy the text from the paper, plop it in here and edit it down. Because most of the papers talk too much, they write too much. You don't need a lot of ands and thes and is and so's and stuff, just get to the point, and just edit it down so you got the data in there. You want to bold that, and you want to bold that. So you want to bold the index levels, and you want to bold the percentage changes. And if this was oil, since January, oil prices rose from $50 per barrel to $56 per barrel, comma, up X percent. So I would bold the prices, and I bold the percentage change. Because I can scan it, and I'm looking for the data. Okay. A lot of us executives were data junkies. We're constantly looking for data analysis. We memorize this stuff. We keep it inside of us to make decisions, and then when we're talking to clients and stuff, we're using the research that you did in our conversations because we know it's the most up-to-date and accurate. Okay. And then a few more data points, and then you have the graphs over here. So this could be the S&P 500 index, 2019, 18, 17, 16, 2016. So I like to have at least 3 years of data. And then the chart probably looks something like that. So what I can do very quickly is go, oh look, S&P 500 index has been on an upward trend. Oh, it looks like it reached a support, and here's the resistance, in 2018, and it broke out here. Is it still in an upward trend? So I can quickly do technical analysis by using the charts. And you're all going to be doing that stuff. You're going to be looking at data and trends in data and looking at the behavior of data. Okay? And what you'll see is there's recurring patterns in the data. Okay? And then you'll do that here maybe for Apple. This is the Apple stock. Okay. So they bring the charts over. Stockcharts.com and bigcharts.com are the best places to get this. When you do the charts, have a white background. Don't use a black background. It doesn't look good. Use a white background. Okay. Any questions so far? This is tedious. Boring. Interesting. It's required. Sorry. No, because the only reason why I'm doing this is because the managing director at Townsend, which is a consulting company in San Francisco, she said I met her like 5 years ago, and she said, the students don't know how to write memos, and it's infuriating because I'm trying to get, send out an email or I need a memo sent to a client, and they send me these memos that have punctuation errors and formatting errors, and I got to clean it up, and it's really frustrating and it wastes my time. I need to be able to get those emails, I need those memos to be formatted and written correctly so we can move on and do some stuff. She said even the Stanford and Cal students can't write good memos. So I decided I would focus on it. Okay. So the last thing, which is pretty easy, is you basically take this paragraph, okay, and you copy it, and you paste it here at the end of your memo at the bottom. And you only have to make 2 changes, okay? Where it says following right here, turns to above. And the semicolon turns to a period. That's it. Okay, so that's the memo. Once you get the stock memo done, swap it out for oil. Maybe change the factors a little bit. If you think it's still going down, these don't change. Then you update the bullets using oil data, and then you update the charts using maybe a oil price chart or an oil company chart to put in there to change it. Okay, yes.
What did you say about following?
Over here, so the very last paragraph in the memo, because you're trying to reiterate, your argument, is you copy and paste it over here into the conclusion, and you change following right here to above, right there, and the semicolon turns into a period. So when they read this, it refers back to the memo. When you read this, it refers down to the memo. So it's a pretty clean memo. One of my students designed this and really worked on it for a whole semester to come up with this tool.
Is it a semicolon or a colon?
That is a colon, sorry about that.
Gotcha.
Colon, sorry, did I say semicolon? Sorry about that, colon. Okay, all right, so let's do one more, real quick. Because there's, yes,
Just out of curiosity, if you kind of keep something in size, why are you pasting the same information twice?
a reiteration of the argument. Because usually what happens is the reader will read the first, they'll look at the trades, and then they'll read the data points, and then they'll conduct a technical analysis, and they'll forget. So when in business, you're trying to be argumentative and persuasive. So you need to reiterate and take it home, right?
Are we going to have to put the forecast ourselves, or basically?
Yeah, the forecast ranges, just to give you some guidance, is the stock market, stock prices can move up or down by 10% easily within a quarter, within 3 months. And then the oil and gold and bonds, I wouldn't do more than plus or minus 5%. And probably 3% for currency, foreign currency, or US dollar movements. I would probably do 3%. So those are kind of, based on history, those are reasonable ranges in which they can move up and down. So this is kind of a guideline that you can use. The key at the end of the day is, do you think their prices are gonna go up or they're gonna go down? And you could use those as a guide. You just plug those numbers in. So the only thing at the end of the day, after you've done the research, what do you think they're gonna do? The prices are gonna go up or they're gonna go down? Okay? If you think they're gonna go down, then those are the trades that you're gonna use. Okay? If they're gonna go up, you gotta do another set of trades. So let's change this around. Because you may think oil prices are gonna go up or gold prices are gonna go up. Or maybe you think stock prices are gonna go up. So there's another set of trades. So let's change it. Okay? So stock prices forecast to, wait, let me do it like this. Rise 5% over the next 3 months. We are tracking stock prices. Based on our research, we forecast stock prices to rise 5% over the next 3 months based on the following factor. Oops, oh my God, that's wrong. That should be falling earnings per share. Make your corrections. Oh, these are wrong. This is totally wrong. I totally screwed up. Sorry, let's do this. Let's just make these corrections first. Okay. Rise. Rise. And then these, oh, I totally screwed up. Damn it. Sorry about that. We'll get it. I apologize. Okay. So, stock prices forecast to rise 5% over the next 3 months. We are tracking stock prices. Based on our research, we forecast stock prices to rise 5% over the next 3 months based on the following factor. Rising earnings per share, rising earnings expectations, correct. Low and falling interest rates and a rising global gross domestic product. Got it. Okay. Then, the trades are gonna be buy forwards futures, buy calls, rate puts. Sorry about that.
So for point 2 and point 3, we don't change the language?
No, I delete it. No, I totally screwed up. It should be rise.
But for point 2, saying low and falling interest rates.
Yeah, those are gonna cause stock prices to go up.
Okay, and in the opposite direction, like high and
Rising gross domestic product will also cause stock prices to go up. Okay, so it's really these two, and then the trades. And then I'll flip it and I'll show you how to do the other stuff. Okay? All right. And then here, you're gonna buy on margin. You're gonna buy calls, and you're gonna write put. Sorry about that. Margin, write calls. Nothing else changes. Okay, do I need to go through that again? Did I totally confuse you? Okay. Stock prices forecast to rise 5% over the next 3 months. We are tracking stock prices based on our research. We forecast stock prices to rise 5% over the next 3 months based on the following factors: rising earnings expectations, low and falling interest rates, and rising global gross domestic product. Got it. The trades and prices are going up. You're going to buy forwards, forward contracts. You're going to buy futures and futures contracts. You're going to buy calls on futures. You're going to write puts on futures. Again, I'll explain what these are. But just memorize and use this language exactly. Okay? You're going to buy the exchange traded funds and the stocks on margin. You're going to buy calls and you're going to write puts. The 335 doesn't change. 12, 9, 15, 36 doesn't change. The date is going to change, obviously. Yes.
Did you say font size needs to be 18?
All of this font is 12 point.
Oh, 12 point,
12 point new times Roman. Because that's the business. New times Roman is business. And it's 12. This is the only thing up here is 18. Right there. With 1 inch margins. Okay, any questions?
The first bullet point on ETF.
Buy on margin,
Fine.
BUY on margin. And I'll explain what these are. They don't talk about derivatives in your book until chapter 20. And by that time, you're burned out, checked out, and you're not going to learn it. Okay? So that's why I bring it up. Okay, are you ready for the next one? Okay. So maybe you think that stock prices are going to fall. So let's just flip it around. Fall. And then what would we do here? Fall 5% over the next 3 months based on the following factors. Would it be rising or falling? Would it be low and falling interest rates or rising interest rates?
rising.
Rising interest rates and rising or falling gross domestic product. So once you know one, then you can just flip it pretty easily. Yeah.
Can you use drop and falling interchangeably?
Drop is good too. Yeah. I don't like decreasing or decrease. I like fall, drop, dropping, drop, fall, rise, up, to, those things. More dramatic, more to your point.
Bless you.
And then here, we're going to change the trades. This is your second set of trades. When do you think prices are going to fall? Right? Forward contracts. Right. Futures contracts. Right. calls on futures, and you're gonna buy puts on futures. Okay. Here, you're going to sell short. It's called sell short. Get it right. Calls, you're gonna buy puts. Short. Right. You're gonna buy. Only thing that would change is the data here would support your forecast of falling prices.
What's the dollar sign on the left-hand side? Sorry, I missed the decreasing, increasing, whatever. No, sorry, on the, sorry.
You buy forwards, buy futures, buy calls on futures, when prices are going up.
Okay,
When prices are going down, you're gonna right, buy. Sell short, right, buy.
okay,
So those are the two sets. I'll break them out later on
okay,
into two separate trades, but you wanna, I would do them separately and then just memorize up and down
okay.
trades. There's only two sets. When prices go up and when prices go down. That's it. So once you know what direction it's going, I would use the percentage change that I provided over there as standards and just tell me where you think they're gonna go. Give me some supporting factors and then give me some data that's going to support your forecast. Yes.
Will we choose whether or not we do stock prices, oil, like?
No,
is it that-
you're gonna do stock prices,
Okay,
oil, gold, bonds, and then the US dollar. And then the memos that I gave you, there's some examples there, so you can read them, kind of see what other students have used for data. And then what I recommend that most students do is to go ahead and build a memo, using the data that was used before, so you can get a template and then update it. And just change the bullets, swap out the charts, maybe swap out one or two of the factors. I mean, where do you think stock prices are gonna go? Well, yeah, they could go up, they did go up, they did go down too. If we fall into a recession, they're probably gonna go down. So it really depends on what your view is. If you think that we're not gonna go into a recession, labor markets are still tight, GDP is still running around 2%, and with the lower interest rates, particularly long-term interest rates, those are all arguments for higher stock prices going forward. And then you can just reverse those to make an argument for lower stock prices. So it's really up to you as the analyst to do the research and then come up with an opinion.
so just to clarify, we're gonna do one for each of those? Have one memo for each of the
Yeah,
different, okay.
yeah. So we're gonna start with the stock memo, the stock price memo, and then I'll take a look at it, see how it is, look at the formats, check your grammar, check, a lot of stuff, give you some feedback, and then we'll go back and forth together until it looks really good, and when it looks good, I'll go, oh man, go do oil now. Go do oil. And then what you'll do is every time you hand in a memo, like the first one will be stocks, then the second time the memos are due, and we've been working together before that, you'll hand in stocks and gold, and I'll look at both of them. And the third time will be stocks, oil, and gold, right, all three. So throughout the semester, I'll be looking at your memos over and over and over, giving you comments to the point where it's like, these are perfect. Print them out in color, staple them, and stick them in your folder, and give them to me, with deliverable 3 at the end of the semester. Okay. And part of the exercise is getting used to working with me. Okay. A lot of one-on-one, because the EVPs and the managing directors used to sit down with me and show me where my grammatical and my formatting mistakes were until I learned it. And to the point where, like, here's the memo, they would look at it, give some suggestions, and it was ready to go. But you really need to sit down with somebody like myself and see our style and how we edit other people's work, and then have you go back, do the edits, come back, look at it, go back and forth until it's perfect. So that's huge. A lot of students who have not worked in corporate have a really hard time getting critical feedback from supervisors and managing directors. They just can't handle it. But a lot of my students have told me that the process that we went through on the memos to go back and forth and feedback on the deliverables just got them really comfortable in going back and forth and getting suggestions and corrections from who they were working with. So then when they worked with, went off to go work with them, they loved it. It was like, no problem. But other students were having hissy fits and temper tantrums when, they were getting critical feedback on their memos and reports. Okay. Any questions on that? Can you? Okay, awesome. And then, how much time do we have?
About
10 minutes? 8 minutes? 8 minutes? Can I do this in 8 minutes? We'll start on the lectures, but I wanted to show you something. This is what I think is really fascinating. Because I get asked all the time, when's the next recession? Professor says, when's the recession? When's the recession? When's it gonna hit? Is the stock market gonna go up? Should I be buying more stocks? Should I buy my real estate? Should I sell my real estate? So go to, type in dynamic. We're going to talk about this next Monday. So type in dynamic yield curve. Dynamic yield curve, right here. Dynamic yield curve. Pull it up on your computer. And click on it. Stockcharts.com. Stockcharts.com. Dynamic yield curve. I don't want the support page. I don't want that. Looks like they changed it. Okay, that's it.
Yeah.
So click on dynamic yield curve tool. Okay, so this is it. How much time do I have?
5 minutes.
So this is what is called the yield curve. These are U.S. Treasury bonds. Okay. This is the interest rate on the bond by maturity. 3 month, 2 year, 5, 7, 10, 20, 30. This is the S&P 500 index. These are stock prices.
What's the cutoff between cash and corporate?
This is government securities. This is the interest rate on risk-free U.S. government securities. Now click on animate right here. And you can see in 2000, leading up to 2000, which was the peak in the dot-com era, interest rates were pretty high. Well, watch this. Short-term interest rates, as it starts to reach the peak, the curve, it's called the yield curve, interest rates on short-term bonds inverts. So this is an inverted curve. Okay? So the curve inverted, and then within 24 months of the inversion in the curve, the stock market went into a crash. And then the Federal Reserve came in and started buying bonds, driving up bond prices, driving down interest rates, to drive down the cost of capital and stimulate the economy by making consumption and investment cheaper. So what's interesting is the yield curve is very steep here because the Fed is buying the bonds, driving up bond prices, driving down interest rates. And they're driving down the cost to try to stimulate the economy because borrowing costs are so cheap. And then what you see is as we start to move into the recovery phase and start to approach the peak in the stock market, interest rates start to rise again. And as you start to approach the next peak in the stock market, you can see that the curve is starting to flatten. What happens is right before the peak, the curve not only flattens, but it inverts. So it's going to invert any second, and boom, it inverted. Then the stock market peaked, and within 24 months, we were in a recession. So the yield curve, the inversion of the yield curve, which inverted about 2 weeks ago, but it actually has been inverting for about 1.5 years now, has been one of the most accurate predictors of stock market peaks and recessions. And if you go back to the early 70s, and you can even go back to World War II and look at this as a predictor, it's been extremely accurate. And what happens is once the yield curve inverts, the stock market peaks in less than 12 months, and we're in a recession in less than 24 months. And it's been proven. Now what you're going to find out, how much time do I have? 2 minutes? How about out of 2 minutes? 2 minutes? Watch as we start to approach up here. This is unprecedented right here. So the Fed left interest rates extremely low for a long time and created a stock market bubble. Because interest rates were so low, there was so much liquidity in the market, and there was no place to put money than the stock market. So everybody piled into the stock market.
And interest rates were low, bond prices.
Yeah, see how low they are compared to history. So they're really low, and then all of a sudden the market went into this bubble territory. And what you'll see is up in here, the yield curve is already inverted again. It inverted like 2-3 weeks ago. And the stock market crashed, went down like 800 points. So it's an extremely accurate predictor of stock market peaks and recessions. We'll go through this again, but I wanted you to see this because this is a big topic these days. Thank you, everybody. Sorry about the confusion on the memos. Yeah, if you can give me your finance stuff, I appreciate it. Or you can give it to Thank you so much. And we'll be at the Involved in Fair too.